Welcome to our journey through the maze of investing, where the silent beast of inflation lurks around every corner, quietly diminishing the value of your hard-earned money. Imagine this: a whopping $13.9 trillion is lost globally to inflation every year. That's money that could have been used to build homes, educate children, or save for retirement. Inflation is like a stealthy thief in the night, eroding the purchasing power of your savings without you even noticing. But fear not, for there are weapons you can wield to fight back and protect your financial future. In this video, we're diving deep into the realms of stock and real estate investments, two powerful contenders in the arena of wealth building. But how do you know which champion to back? With the average annual inflation rate creeping up, the stakes have never been higher. It's a showdown between the rapid agility of stocks and the steadfast endurance of real estate. We're here to arm you with knowledge, strategies, and real-world insights that will help you make informed decisions in your quest for financial freedom. Will you place your bet on the dynamic, ever-changing stock market, or will you invest in the tangible, brick-and-mortar world of real estate? Or maybe, just maybe, you'll discover that the most potent strategy of all is a blend of both. Stay tuned as we unpack the mysteries of investing, unveil the true impact of inflation, and guide you through crafting a diversified portfolio that stands the test of time. Are you ready to take control of your financial destiny? Let's embark on this adventure together and turn the tide in the battle against inflation. Chapter 1: Introduction to Inflation and its Impact on Your Money. Let's start with a surprising fact. If you had $100 in 1990 to have the same purchasing power today, you'd need over $200. That's inflation for you, silently diluting the value of your money over time. Inflation is like an invisible force, gradually reducing what you can buy with your cash. Imagine saving diligently, only to find out your money buys less than before. But there's a silver lining. By investing smartly in avenues like stocks and real estate, you can not only safeguard your money against inflation but also grow it. How does this work? It's simple. Your investments need to grow at a pace that outstrips inflation, turning the tide in your favor. Inflation isn't just a number. It's a real-life factor affecting how we save, spend, and plan for the future. The trick is not to let your money sit idle. An account earning 1% interest when inflation is 3% is not saving. It's slowly losing value. It's crucial to understand this dynamic because it directly impacts our financial decisions and long-term well-being. Investing, therefore, isn't just a choice. It's a necessity in maintaining and growing wealth. Chapter 2: Understanding the basics of stock investments. Diving into stocks, let's unfold what it actually means to invest in the stock market. Imagine owning a piece of a giant technology firm or a renowned beverage company. That's what buying stocks allows you to do. Own a portion of a company that you believe will grow over time. The beauty of the stock market lies in its potential for significant returns. Historically, the average annual return hovers around 10%, but this comes with its share of ups and downs. Stock investing is not just about picking winners, it's about understanding the market's nature. Volatility is a constant companion in the stock market, with values fluctuating daily based on a myriad of factors. However, this volatility isn't necessarily a bad thing. For patient investors, it presents opportunities to buy quality stocks at lower prices. The key to succeeding in the stock market is a mix of patience, research, and diversification. Diversifying your investment across various sectors and geographies can reduce risk. It's like not putting all your eggs in one basket. If one sector performs poorly, another might excel, balancing your overall portfolio performance. Moreover, reinvesting dividends from stocks can compound your returns, turning a modest initial investment into a significant nest egg over time. Remember, successful stock investing is not about outsmarting the market. It's about participating in the market's overall growth over time. It requires a strategy, discipline, and an understanding of your risk tolerance. By investing in a diversified portfolio of stocks, you're not just betting on individual companies but on the growth of the economy itself. Chapter 3: Diving into real estate investing. Real estate investing might seem daunting at first, but it's as old as the idea of land ownership. You're not just buying property. You're investing in tangible assets that people need, spaces to live, work, and shop. Unlike stocks, real estate offers something you can see and touch, and this tangibility adds a sense of security for many investors. The allure of real estate lies in its dual earning potential. rental income, and property value appreciation. Imagine owning a rental property. Not only do you earn monthly rent, but if the property's value goes up, you'll gain even more when you decide to sell. Here's something interesting. Over the past 50 years, real estate has proven to be a remarkably stable investment, often providing a hedge against inflation. As the cost of living rises, so too can rent prices and property values. This aspect makes real estate an attractive option for those looking to protect their investments from inflation's erosive effects. Investing in real estate also comes with its set of strategies. Some investors prefer residential properties, finding satisfaction in providing homes and building communities. Others lean towards commercial real estate, drawn by the allure of long-term leases and corporate tenants. Whichever path you choose, the key to success lies in research, understanding local market trends, and managing your investments wisely. Real estate isn't a get-rich-quick scheme, but a journey that requires diligence, patience, and a bit of elbow grease. Chapter 4. Comparing stocks and real estate, risks and returns. When weighing stocks against real estate, it's like comparing apples and oranges. Both have their unique flavors, risks, and rewards. Stocks offer the potential for high returns and easy liquidity, but come with the price of volatility and market fluctuations. Real estate, on the other hand, provides more stability and the allure of tangible assets, yet it requires a significant initial investment and ongoing management. One of the most compelling arguments for stocks is the ease of entry. With just a few $100s, you can start investing in a diversified portfolio of companies. Real estate requires a heftier upfront commitment, often involving loans and mortgages, but the leverage used in real estate can amplify returns in a way that's not as directly accessible with stocks. Risk tolerance plays a huge role in deciding between the two. If the thought of daily market swings keeps you up at night, real estate's steadier pace might suit you better. However, if you're excited by the dynamism of the stock market and the potential for quicker gains, stocks might be your arena. Ultimately, the choice between stocks and real estate doesn't have to be binary. Many successful investors find that a balanced approach, holding both types of assets, provides the best of both worlds, the growth potential of stocks and the stability and income of real estate. This diversification can help mitigate risks and smooth out the financial journey towards your goals. Chapter 5. How to use leverage in real estate versus stocks. Leverage, in the world of investing, is a powerful tool. It's like using a lever to lift a heavy object. The right support can make a huge task much easier. In real estate, leverage is used by taking out a mortgage to purchase property. This means you don't need to have the full purchase price up front, allowing you to control a large asset with a relatively small initial investment. For example, with a 20% down payment on a property, you're using leverage to control 100% of the asset. As the property appreciates in value, your return on investment can significantly exceed what you'd get from a purely cash purchase. But here's where it gets interesting. Leverage amplifies both gains and losses. If the property value goes up, your equity increases faster than it would without leverage. However, if values fall, you could end up owing more than the property is worth. Real estate leverage also comes with the responsibility of mortgage payments, maintenance, and other ownership costs regardless of the property's income. In the stock market, leverage is used differently, often through options, margin accounts, or other financial instruments. These tools allow investors to potentially increase their returns without fully paying for the stock upfront. However, just like with real estate, this increased potential for reward comes with increased risk, including the possibility of losing more than your initial investment. Using leverage wisely requires a clear understanding of your financial situation, risk tolerance, and the market conditions. Whether in real estate or stocks, leverage can be a double-edged sword, making it crucial to approach with caution and respect. Chapter 6. Tax implications of investing in stocks and real estate. Taxes are an inevitable part of investing, but with smart strategies, you can minimize their impact on your returns. The tax treatment of stocks and real estate investments differs significantly, and understanding these differences is key to maximizing your after-tax returns. For stock investors, profits from selling stocks held for more than a year are typically taxed at the long-term capital gains rate, which is lower than the ordinary income tax rate. Dividends received from stocks can also be taxed at this lower rate, depending on your income level and how long you've held the stocks. However, selling stocks held for less than a year triggers short-term capital gains taxes, which are equivalent to your regular income tax rate. Real estate investing offers several tax advantages that can make it particularly attractive. For starters, the IRS allows you to deduct the cost of owning, managing, and maintaining your investment property. This includes mortgage interest, property taxes, maintenance expenses, and even depreciation, which can significantly lower your taxable income. Furthermore, if you sell a rental property that you've held for more than a year, the profit is subject to long-term capital gains tax, similar to stocks. One of the most powerful tax benefits in real estate is the 1031 exchange, which allows investors to defer capital gains taxes when they sell a property and reinvest the proceeds into another investment property. This can enable real estate investors to grow their portfolios more rapidly by deferring taxes indefinitely. Understanding the tax implications of your investments is crucial for making informed decisions and optimizing your portfolio for after-tax returns. Whether you choose stocks, real estate, or a mix of both, consider consulting with a tax professional to navigate the complexities of investment taxes effectively. Chapter 7. Building a diversified portfolio for inflation protection. A diversified portfolio is your best defense against the unpredictable nature of markets and inflation. But what does diversification really mean? It's not just about having a mix of stocks and real estate. True diversification spans across asset classes, like bonds, commodities, and even cash, sectors, technology, healthcare, energy, and geographies, domestic and international markets. Here's an eye-opener. Did you know that during the 1970s, when inflation was sky-high, real assets like gold and real estate outperformed many other investments? This period taught investors the importance of having a mix of assets that can thrive in different economic conditions. By spreading your investments across various assets, you reduce the risk of significant loss if one investment underperforms. It's like having several boats in the water. If one starts to sink, you have others that can keep you afloat. Creating a diversified portfolio also involves rebalancing regularly. This means adjusting your investments to maintain your desired level of risk and exposure. As some investments grow in value, they can become a larger part of your portfolio than you initially intended, increasing your risk. By rebalancing, you sell off some of these gains and reinvest them in other, less well-performing areas, maintaining a balanced approach. Chapter 8. Long-term growth strategies in both markets. Achieving long-term growth in your investments, be it in stocks or real estate, demands a strategy anchored in patience, research, and adaptability. For stock investors, a long-term perspective helps ride out the volatility and capitalize on the growth potential of companies and economies. Embracing a buy-and-hold strategy, focusing on quality assets, and reinvesting dividends can significantly impact your portfolio's growth over time. Did you know that the power of compounding returns is often referred to as the eighth wonder of the world? Albert Einstein himself is rumored to have praised its mathematical beauty and practical power. In real estate, long-term growth strategies might involve buying and holding properties in emerging neighborhoods or investing in rental properties for steady cash flow and appreciation. The key is to stay informed about market trends, urban development plans, and demographic shifts that can affect property values. Also, leveraging tax advantages, such as deductions for mortgage interest and property depreciation, can enhance your investment returns in real estate. Both markets require ongoing education and engagement. For stocks, staying updated on financial news, company earnings reports, and economic indicators is crucial. For real estate, understanding the local market conditions, property laws, and tenant rights can make a big difference. Regardless of the asset class, a proactive approach to learning and adaptation is a hallmark of successful long-term investors. Chapter 9. Conclusion. Making the right choice for your financial goals. Deciding between investing in stocks or real estate isn't a one-size-fits-all answer. It hinges on your financial goals, risk tolerance, time horizon, and even your interest and expertise in these areas. For some, the tangible aspect of real estate, coupled with the potential for rental income and capital appreciation, aligns perfectly with their financial vision. For others, the liquidity, diversity, and growth potential of the stock market are more compelling. It's crucial to remember that both paths can lead to financial freedom and success. However, the journey requires commitment, education, and occasionally, a tolerance for uncertainty. Diversifying your investments across both stocks and real estate could offer a balanced approach, hedging against risk while capitalizing on the growth opportunities each market presents. As we wrap up, consider this. The most successful investors are those who remain curious, adaptable, and disciplined. They're always learning, reassessing their strategies, and staying aligned with their long-term objectives. Whether you choose stocks, real estate, or a blend of both, the key to beating inflation and achieving financial freedom lies in making informed decisions, staying patient, and keeping the course towards your financial goals.